What is price action? If we go to the best known website investopedia.com and look for price action definition, we will see this. What is a price action? Price action is the movement of security price plotted over time. Simple definition. Let me see another website. thebalance.com. Price action trading is a method of day trading where the traders make decisions about trade based on the price movements rather than indicators derived from the technical analysis. If you go some other website, the same story, priceaction.com, then if we go to learntrademarket.com and so on and so on, every single definition is something like this. Movement of security price plotted over time. Simple movement. But we can ask ourselves, is price action really this definition? In reality, when you create a strategy, is the price action every single moment, every single time? We have a price and time and this is price action. No, it's not. My name is Igor. This is FX Igor YouTube channel, and today we will try to define price action in a new way, like we do in prop companies, in various hedge funds, and so on. So people and professional traders, price action defined little bit different than this. I will try to define price action. But first, what is action? By definition, action, the doing of something, state of being in motion or working. So when I hear the word action, for me, the main association is movement, working something, be in motion. So if we know that, we try to define price action. So price action represents price movement that has aggressive initiation activity and strong price rejection of higher or lower prices. So this is the real price action term that we use in hedge funds and prop companies when we talk about trading and somebody just say price action. The first association is aggressive activity, strong movement, some strong price rejection of higher or lower prices. But of course, as you see, you can find on internet and some general broader definition that is also true, and it is usually price action implies trading without indicators based on price levels and price movement analysis. Of course, when we talk about price action in general term, we will define like this. But when we talk about practical trading, price action needs to represent strong price movement. And it's very important in our technical analysis. On this image, we can see strong support, it's a blue line, and strong resistance, it is a red line. As you can see right now, on this weekly British pound, Japanese yen weekly chart, we have a strong support, and price in one moment is trying to break this support. In that moment, we have very strong price action. When I say strong price action, usually on the chart you will see some kind of doji candle. It can be various candles with long wicks. When you see candle with long wick or just simple doji candle, for example, we can talk about some strong reaction on some support to resistance level. In this case, we have a strong reaction on support level, and in a very short time we have a strong bullish trend. After that, we can see strong bullish trend from the support to the resistance, and price is trying to break resistance. What is the characteristics of price action? So we can have two main scenarios. One scenario, we can see price that is trying to break support or resistance. After few minutes or a couple hours or a short time frame, we can see that price cannot break that level and very fast is going to opposite direction. Usually when you have a strong support, price will try to go up, and it's a normal thing. Of course, sometimes in the second scenario, we can see that price is breaking line, support line or resistance line. The both examples are the same. So we have opportunity to enter into trade when we see strong price action. And we can put very tight stop loss. When I say tight for that time frame. For example, for weekly time frame, it can be several days low or high. But for hourly chart, it can be only 1 hour or 2 hours low. And it is a very tight stop loss because the target can be several times bigger than stop loss. In that case, we can try to use that information and to enter into trade in the right time and try to achieve bigger profit. Of course, in theory, it's very simple. And when we talk about practical trading, it's very tough. And what is the most important thing? You know that one of the biggest and most popular chart patterns, engulfing bullish and engulfing bearish pattern, is some kind of pure example of price action. Why? Because the second candle, even in bullish engulfing pattern, either the bearish engulfing pattern, is example how price can go in opposite way and then very fast go in another way and make a strong bullish or strong bearish trend. So the engulfing pattern is example of bearish pattern. Of course, any kind of a doji candle, any kind of long wick candle, is just show that in the short time frame you have a strong movement. But you should not use only one trigger. For example, you can make combination with other triggers that you have. For example, you can use economic news, you can use important fundamental events or fundamental your analysis that you have. For example, you have analysis related to GDP or interest rate or industrial production or parity or anything else, and you can combine that with this support resistance analysis, and with that kind of combination you can enter into trade. What it means in practice. So if you watch this image that we see the blue and red line, you know that in this example we had excellent news for British pound, and we had some kind of range in technical sense, but we had excellent reports for England economy, and because of that I had additional trigger to enter into this trade. The same thing is if you trade, swing trades or long-term trades, you can use fundamental analysis. Of course, if you're a short-term trader, and it's very difficult to use fundamental analysis and projections because all these projections are very slow and you're very fast, very nimble, you try to enter the market and it can be very, very tough. But you can create some other combinations with other technical levels and other calculations. For example, your support or your resistance can be, for example, 7 days, 14 days, 30 days support, or at the same time last 10 years Fibonacci level, or you can see some level as important level on various time frames, and because of that you can use that knowledge to enter into trade. You can use that as additional triggers. Sometimes you will see in trading, you can have very, very strong support. When I say strong, I think support that was strong last long-term period. Longer period, it's more stronger. And this is the main idea how to trade, how to use this price action trading. You can create a lot of combinations with other chart patterns, of course, like Harami or Doji candles or any kind of candles that use long wicks, like I said, engulfing patterns too. And you can use all these techniques with price action. A lot of traders say that price action you can trade without other indicators. Yes, you can, but of course, you can use, for example, relative strength index or some other oscillators in combination and trade price action, because price action is correlated with indicators too. And this is the one problem that I have with the definition of price action and naked trading. Because people say that price action is the same as naked trading. And if I put a relative strength index or MACD on my chart, in that moment, we cannot talk about price action. Yes, we can, because price action is price action. Price action is action of the price in some short time frame that we watch. If you have a strong movement, either on weekly, either on daily chart, on any kind of chart, some strong movement in short time period, I can talk about price action. We have action with or without indicators. Indicators are not important. You can use them as additional triggers, but price action is, I think, really simple term, but people created a too complicated or too broader and too general term that a lot of traders cannot understand. We can argue about this, my opinion, of course, and I can admit or I can accept your opinion too, but I think that price action should follow the name of this expression. And I think that we need to see action on the chart when you use this term price action. So sorry for this complicated description. Anyway, I just want to tell you just to use two simple steps. The step one, calculate and determine support and resistance in your chart. You can use support and resistance on various techniques. You can use pivot levels, you can use Fibonacci levels, you can use previous high and previous low, you can use multi-day lows and multi-day highs as a main rule for your support and resistance levels. It's up to you. You can use anything. When you find and see what is supply and demand zones, what are support and resistance levels, after that you just need to monitor that zones and to see price action around that levels. If you see strong movement that breaks resistance or breaks support, in that case you can enter to trade. If it breaks support, you can sell. If it breaks resistance, you can buy. Of course, if you see that price touch support level and very, very fast is going up, you can buy, because it's an example of support rejection and example of price action in bullish direction. If you see that price touch resistance levels and very, very fast it's going down, you can sell because it's resistance rejection and we can see a further bearish trend. So this thing is very simple if you try to present to yourself as a simple thing. Of course, my advice is to use additional triggers, combination with fundamental analysis or any kind of analysis, because sometimes this is not enough. Of course, if you use this technique on long-term time frames, such a daily time frame or weekly time frame or monthly time frame, in that case you can be a little bit relaxed because the price change will not be so fast. In that case, you will have one day to see, whole day to see how that price direction is going. So you need to wait to see daily close, the next daily close, what's happened, and then to determine is this support rejection or it's a breakout or it's not, and so on and so on. It's up to you, of course. So this is it, and I wish you a great day.